Boom. Alright, what's going on, you guys? It's Royce Jacob. Welcome back to the channel. In this video, we are going to be talking about the absolute bloodbath that is the markets at the moment. We kicked off the new trading week with a bang in the form of a freaking nuke, which in all honesty, you guys, love to see. I was so pumped to see the carnage that we did in the markets today because I was ready. If you guys have been tuned into the channel, then you would know that I've been a bear, a berry bear, a hungry bear for the past couple of weeks. Therefore, I have been heavily hedged in my personal portfolio and ready for this downturn. Shout out Portfolio Newsletter Group. You guys would know that. And I hope you guys were hedged as well coming into the week, because if you were, it proved to be extremely lucrative, you guys. It pays off to be a bear sometimes when everyone else is bullish, because that's when you can see the biggest returns. And even in a bear market, there's always a bull market somewhere, even if that bull market is being a bear and shorting, okay? So let's get into it, you guys. As you know, this will be a macro analysis, so we're just going to focus on some of the bigger players today, talk macro, keep it big picture, and I do primarily just want to give you guys my overall thoughts on the greater market environment at the moment, talk a little bit of investor psychology, and just what I'm expecting next, okay? So we are going to be covering 4 names today. I guess 3, but talking about 4, okay? So we're going to kick it off with the SPY, or the S&P500 on the charts. Pretty much it sums up the greater equity market, so you guys know why I like the SPY. Not going to go into that right now, but kick it off with the S&P500, or the good old SPY. Talk about the VIX a little bit. You guys know the VIX, the CBOE Volatility Index, is inversely correlated to the S&P 500, directly, like straight up inversely correlated, okay? So it does the exact opposite. SPY goes down, VIX goes up. When there's volatility in the markets, that's when the VIX really performs. And you guys know the Waves fam thrives in volatile times. So love to see this. Was ready, so ready with a big old bag of VIX coming into the week. VIX was up 23%, so some of the ETFs I trade for the VIX were absolutely printing, and again, the calls were insane today, okay? So cover the VIX. Not really going to look at the VIX on the charts, just kind of talk to you guys about just mention it to you guys if for some reason you don't know that even in a bear market, you can hold certain ETFs around the VIX that are based around the VIX and make money even in a bear market, okay? So just throwing that out right now. We will move on to, of course, Bitcoin. Can't talk macro without talking BTC. There is absolute carnage in the crypto markets right now, you guys. A lot of you would know that the crypto markets, because they are 24/7, can act as a precursor to the equity market. So the fact just yesterday when we started to see Bitcoin and Ether tanking, that kind of led me to believe and got me excited, honestly, that we would see what we just did in the markets today, all right? So Bitcoin, and then we'll close it out with the good old DXY, or the US dollar index. Pretty much just weighs the strength of the US dollar relative to a basket of other fiat international currencies. So close it out with the dollar. You guys know that the dollar is the base of all macro. And yeah, we'll take a look at the dollar and just close it out with my final thoughts surrounding the markets while we just take a look at that chart, all right? So those are the names we will be discussing today, but first I do want to read over the intro to this morning's newsletter that I sent out in the wake of all this carnage. Again, you guys, super exciting morning. I do hope you guys were hedged at least a little bit. Even if it was a small hedge position, it keeps your portfolio safe. And again, thankfully for me, I was very heavily hedged, and it was a very, very green morning for your boy. So I hope it was for you guys as well. If so, cheers. Let's read this and get down to business. So what a day, Waves fam. We're kicking off the new week with an absolute bloodbath, and I've never been so happy to say that. Feeling like a shark. In a somewhat dark way, it's more satisfying to make money when you know 99% of people are losing it. So again, a lot of people lost money. That's such a bummer. If you guys lost money, I feel you. Been there. You guys know I've been there many times. But it just pays to be, again, it pays to be a bear sometimes when everyone else is a bull. Obviously, it's a bummer, but it more so speaks to being a lion amongst sheep, or in this case, a bear amongst bulls. Being on the right side of the trade pays off. So again, you guys, I've been bearish for a while. It's not fun to be bearish. You guys know I don't like to be a bear, but that's just the game sometimes. That's what you have to do as a trader. You have to rationalize the situation at hand as best as you can, so you can analyze times like this and perceive and just, you guys know what I'm saying. Like, you can, for all the reasons that I've been talking about for the past couple of weeks, and all the kind of naysayers out there, the perma-bulls you could call them. And again, I don't like to be bullish. I'm usually a perma-bull. I'm an optimistic guy. But just all of the signs that have been pointing to downside are finally paying off. And it's just good to see all the research you've done and just kind of what you've been like, just the opinions that you have come to fruition. Okay, so we'll call that there. Tripped all over that one. Sorry about that, you guys. But I hope you guys get what I'm saying. Just being right feels good. Not more so than the money, I will say that much. Being right, especially when you have a platform like this, thank you guys, is so much more fulfilling than the money. So again, feels good to be on the right side of the trade. All of the hedge positions in the portfolio today are printing, and I'm taking some profits. I'm also on a little staycation. Came into the office still, so this couldn't make me feel better about splurging a bit. I hope all of you treat you and your loved ones to a great dinner this weekend. If you're also seeing some gains, gonna keep it short and sweet. I also want to make it very clear, I'm sitting on a very solid cash stack at the moment. I usually redeploy most of the profits that I take, but given the current state of the market and the strength of the US dollar, I feel safe with some good old dollars on hand. Okay, so in a time like this, even though I did take some profits from my hedge positions, and I do think the equity markets are going to fall further, but it's so important, you guys, to sit on cash when the times get tough, and just have cash, have US dollars on hand to redeploy, to have some dry powder when you see the opportunity. Okay, so if you guys do want to know exactly how I was able to make money today while the rest of the market melted, and if you guys want to know exactly where I'm buying, what I'm buying on these dips, what I'm dip buying, how I'm structuring it into my portfolio along the fall, in the case that we do see more downside, of course, my money's on it. But if you guys want to know exactly how my portfolio is constructed, why I'm trading the way I'm trading with the newsletter, check out my complete portfolio daily newsletter. First link down below. $15 a month, $40 every 3 months. You guys know the drill. To each their own. Do my best to make that worth your money on days where it's good, especially where everything else is bloody. I have zero guilt at all shouting this out. I think it's super worth it. Obviously, I'm biased, but again, I do my best to make this worth your money. If you guys watched the exclusive Sunday Stock Watch, the private Sunday Stock Watch video yesterday, this was all kind of in the cards. So again, just feels good to be on the right side of the trade, and be a bear in a bullish market, because that's a little more impressive than, it's easy to make money in a bull market. Anyone can make money in a bull market, but in a bear market, it takes some semblance of skill to make money in a bear market. Okay, so just feels good. All right, so once again, cheers, you guys. Appreciate it if you check this out. It means a lot. But if not, I appreciate your time right now. Let's talk some charts. Let's talk some macro. Okay, so as you guys know, over the past couple of weeks, again, for probably 2 weeks now, I've been a bear on the S&P and Bitcoin, actually. And again, Bitcoin, the cryptocurrency markets, tend to act as a precursor to the equity market sometimes. So Bitcoin, the fact that Bitcoin was underperforming, just also that, again, all the negative stars, all the dark stars, leading me to believe that, again, the equity markets, we're going to see downside. Just looking at this chart, you guys, again, just zooming out and looking at this freaking chart, it's about time for a pullback. The September sussiness, historically bad month. Investors did pretty much just will that into existence. And yeah, there's just so many factors that led me to be not surprised at all to see this. And again, that's why we're hedged. That's why it's important to hedge when the market's just reaching freaking new all-time highs every other day. Okay, so from a technical perspective, you guys know I pretty much flipped bearish once this trend line was broken right here. This overall trend line, the sign trend line, is a very, very strong line of support for the S&P on the long-term uptrend. Next trend line I was looking at is a short one right here, this green one, short-term line of support. Broke that, flipped even more bearish. Was excited to see that. This orange line right here, which I just covered in yesterday's Sunday Stock Watch, gapped right below that, was the final trend line I was keeping an eye on. And now that that's been broken, again, we just gapped straight below that. I think the S&P, was yesterday, has at least another 3.5% or so, so just under 4% further downside from here. Maybe we see a little dead cat bounce. Maybe we go sideways for a bit, but you guys know the deal. The same thing happens with Bitcoin. This is fear. This is what fear looks like. Everyone's fleeing to the dollar at the moment. That's why we're going to look at the dollar at the end. Again, dollar showing strength, and the equity markets and everything that trades against it is showing weakness. Okay, so again, everyone's scared. You can smell you can freaking cut the fear with a knife right now. Investors are scared. Again, a lot of people also are taking gains. A lot of people are just I mean, I know it's not easy to just liquidate your 401k, but at these levels, again, once you're reaching new all-time highs, investors are just it's about time to take some profits from the long-term gains. Okay, so especially when the market starts, again, the higher you climb, the harder you fall, you guys. That just applies to many things in life. Higher you climb, the harder you fall. We've climbed very high. Of course, the money has been printed. There is the current macro environment is very different than any other environment we've ever lived in. So that does change things. There is just more money floating around because more money has been printed. So it makes sense that we are seeing new all-time highs, but again, at some point, it's just not, you just cannot justify, even though there has been so much money printed, there is literally more US dollars in circulation than, like, way more, significantly more than there was prior to everything that went down. But again, it's not rational. It's not reasonable to believe that we can just break to new all-time highs every other day. Like I just said, that's a little bit of an exaggeration, but you guys know what I'm talking about. Regardless, I do think that we will inevitably fall a little further in the short term. Again, fear. The fact that we kicked off the trading week with this type of price action instills fear in investors. Everyone for the remainder probably of this month, for the next couple of weeks, is going to be very hesitant. So in all honesty, I think we're at least going to come down to about 420 bucks. 420, been saying that. Once the SPY reaches 420, in my hedge related positions, I will likely begin taking significant profits from my hedge related positions. Just took a little bit of profits today, and I was talking about this in the newsletter. A lot of times, like, you see that spike like 15-20 minutes before the market closes. You always see that spike. If the market's bloody in this, I should say, in the COVID economy, in this new kind of market environment, the Fed steps in right as the market closes. That's why you guys will notice that on bloody days, on gnarly days, when the market's down, you're going to see, like, right before the market closes, the Fed step in, and you're just going to see that parabolic shoot up because they're panicking. They're pressing the buy button. They don't want to get in trouble with freaking everyone with a 401k, okay? So keep that in mind if you're just trying to day trade that. I'm not doing that, but always just keep that in mind, you guys, and you will see that happen more and more, okay? Especially if we do continue to fall. But again, just sentiment is obviously bearish. Sentiment is negative. Everything on the freaking charts was on the red today, aside from LCID, surprisingly. So shout out Lucid. But again, you guys, I do think more downside is ahead. Maybe we see a little bounce tomorrow. If that's the case, I'll probably pick up more hedges. I'll probably reaccumulate some of the hedges that I just profited from. And I do think that we will see at least 3.5% down from here if we do break below this previous high. So the reason for this red line is, of course, the high before the last fairly significant correction. So I do think that this is the first floor. Maybe we fall straight down there tomorrow, and then that's where we see the kind of dead cat. But if we fall and then see a bounce up, we'll either base out there. If this is broken, though, I will say that if we can break, just to keep it kind of safe, 415 bucks, if we get below $415, I think it's pretty damn likely that we ultimately come to test this long-term line of what was resistance, and I do think this will become new supports from current levels. That would be, so wait, no, come on, let's get this over here. From current levels, that would be about another 12% down or so. Okay, so let's put that there. So yep, that would be just over 12% down from current levels. From the peak would be about 16% correction from the S&P's all-time high. That's pretty reasonable, you guys, especially considering how high we've climbed. A 15% correction is not unusual for the S&P500. Nasdaq, again, Dow, probably going to see similar movements. The S&P, as you guys know, the reason I do this is just because I feel like it's the middle ground of the equity markets. It best sums up the overall equity markets. But again, if the S&P falls, the Dow and the Nasdaq are very likely to fall as well. Same goes for crypto. Okay, so I do think it's very possible that once again from current levels we see a further 12% down. And again, if you guys have the right positions in place, if you guys are a bear in the bull market, when the bull market flips bearish, then again it proves to be very, very lucrative. Okay, so just stay on your toes, you guys. It's a very sus environment. No one knows what the Fed's gonna do. No one knows how they're gonna react in the case that we do see our first big pullback in this environment, in this macro environment. So just stay on your toes, you guys. Don't be afraid to sit on some cash, and I would actually highly encourage you guys sitting on cash once again. Okay, so. Not investment advice, but that's the S&P. Again, you guys, VIX, we're not really going to look at the VIX, but you guys can see what happens. The VIX at one point today was up like 30%. And again, just shout out to the VIX, man. There's always a way. Again, there's always a bull market somewhere, even if that is hedges and shorts. Okay, so you guys, don't be afraid. This goes for any bull market ever. Don't be afraid to hedge your portfolio just a little bit. Again, if you're holding all like crypto, if you're holding pretty much most of the stocks that were bullish on most of the time, again, Revolut crypto EVs, you would have gotten smoked today. So again, when the market is just ripping, it's always a good, responsible move to have at least a little bit of VIX. In this case, that was like my primary position, honestly. So again, very good day, but just in regular times, never be afraid to have a little bit of a VIX-based ETF in your account to be that chaos hedge. And again, it's literally a direct chaos hedge. So VIX, let's take a look at BTC. Closed out with DXY. So Bitcoin and the rest of the crypto market, you guys, is not looking good right now. All lines of support have been broken. We are now in a short term, I guess, yeah, straight up short term downtrend series of lower highs and lower lows. High, low, lower high, lower low that we're setting in right now. As I've been saying, you guys, again, when you see a sharp move down like this is when I flip bearish. I was bullish on Bitcoin until we saw this, broke the support on this beautiful ascending channel that was in play for a while, broke this, flipped bearish immediately. You guys know, again, that's why I've been a bear since for the better part of 2 weeks now. And yeah, series of lower highs and lower lows. I think I'm holding pretty true to this price target right here. Previous line of resistance, new support, TA101 right there. Previous resistance becomes new support. Zoom in. Very, very significant trend line right here, you guys. Again, line of resistance on the overall downtrend, broke through that, flip bullish because we broke that resistance. Again, that resistance now likely to come into play as new supports. Price target for BTC, if we really just start falling, which I think is very possible, we're at like 41, 42K right now. Would not be surprised if we fall down to the 30s. You guys know I've been calling 30s for the past week, and again, I think it's very likely that, I think it's more likely than not that by the end of the month, if we do test this line of resistance on October 1st, say October 1st, just for a nice round date, that would take us to $30,700 per BTC. Okay, so keep an eye on this trend line, you guys, and if we break this, that's when I do think we will revert to the mean. Was saying that a lot during the first correction. Reversion to the mean, or the revisit of the initial high of Bitcoin's overall rally of this 2021 rally, which would take us from anywhere from, depending on which high you gauge, from 20 to 25K. At those levels, I am just bag it up on Bitcoin. Obviously 20 to 25K is just about a 50% correction from here. In Bitcoin land, not surprising at all. Corrections, healthy part of every bull market, you guys, present opportunities to the long-term holders. And yeah, I'm excited to scoop up some BTC at quite the discount. Okay, so that's Bitcoin. Let's close it out with the DXY, which is once again looking strong. The base of all macro is the US dollar. Everything trades. The US dollar, if you guys want to say it's going into the trash, going down in the dumps, the reality is the US is still freaking better than most places on earth. China is kind of a shit show at the moment. Don't come after me, China. Just speaking my mind, just my opinion. But China is not looking, I mean, China, there's just so much going on over there. Obviously China, I mean, potentially the future global superpower, I don't know. But China at this moment is looking sus, especially in terms of their financial markets. Chinese stocks going downhill, the dollar becoming stronger for that reason. And again, when everything is selling off, people want dollars, people want safety, and that's why I'm sitting on cash right now. Once again, I do encourage you to as well. From a technical perspective, the DXY actually looks really good. I do think that we will set in a 2021 high for the DXY. Did reclaim this ascending channel that we've been keeping an eye on, and it only makes sense to me that the DXY ultimately comes up to test the top side of this pretty clean ascending channel. That would take us to 95 on October 1st. Again, September 20th as of today. This sell-off, the fear lost, you guys. Fear is there is a resounding fear. Today was the first day of it. So wrap it up, you guys. I'm a bear. I do still see more downside ahead, even in the case that we do see a little dead cat bounce. And yeah, hope you guys are prepared. Stay on your toes, you guys. Stay safe, and get ready for some discounts, and make sure you have some dry powder on hand. Okay, so please let me know in the comments down below what you guys think of the market right now. If you guys were hedged, again, throw a little champagne bottle emoji. It was such a good day for the Waves fam, you guys. Again, if you want to know exactly how I'm trading, first link down below. Appreciate it if you guys check that out. And again, I feel very, very not guilty shouting this out, shouting out the newsletter and portfolio on the days where we do well. Again, especially when most investors, 99% of investors in the game, lost money today. Okay, so feels good, you guys. I'll talk to you guys downstairs in the comments, and if you guys did lose money, I'll be there for some sympathy and empathy, hopefully. So I'll catch you guys downstairs in the comments. Until next time, always remember, take action, make waves. Peace, guys.